right, let's make sure this is working. All right, let's make sure this is working. All right, looks like we're good. All right. So now I just got to get the share right, guys. This is where I always drop the ball. So give me 1 second here. Come over to the daily and get the share. All right. Let's see. Bear with me 1 second. This is always takes me a few tries to get this set up here. All right, I think I got it. Window, bang, share. And I think we're set. And there we go. All right. So welcome to the Wednesday War Room here. Courage pays better than fear trading. Jeremy Ritz, very excited to have you here at this midpoint of the week. And let's jump in and talk markets. We are starting right on time at 2:45 p.m. And here's the SPX. So this week was an important week. First of all, I did not have the Sunday setup video this week because my son was not feeling good. So I did put together an episode of Driven just to give you guys a preview of what to anticipate, what I was watching today. Hello, Rachel. I just saw that you commented there in the chat. And we got CPI on Tuesday. We got PPI today. So we did get inflation data. And Tuesday's inflation report, the CPI report, was a little cooler than expected. Today's producer price index report was a little warmer than expected. And so we're seeing a little bit of downside pressure. And so if we look here on the SPX, what I had drawn out here is this upper trend line resistance that really started taking shape back in October when we got that big sell down off of the China tariffs from Trump. And you could see that it broke above that trend line once, fell back below it, and it's really just been hitting its head off of it since then. And on Monday, we pushed back into that trend line again. We poked our head right above it. You could see that wick. We sold down yesterday after hitting that. Nice little hammerish style candle. Came off of those lows, but today we dropped back down below the 10. We were saved by the 20 here. And so we are experiencing a little bit of weakness right now across the board on the SPX. But notice if we just zoom out here, we could see that we have higher lows coming into play. And so as long as that structure remains intact, then this can continue to push. And I still do believe we are going to hit 7,000, which we're so close to doing that. We're going to hit that first before we get any type of meaningful pullback correction. I think today is just noise, and you will see buyers step back in. But regardless, that is where we are now. And you can see there's lots of support, and this 20 is holding. And then when you flip over to Bitcoin, we could see that we're finally getting some strength here. From the King crypto itself. And you could see that today it pushed into that 100-day simple moving average right here, which is where it experienced some resistance. It did get rejected a little bit. We had this upper wick right above here, got knocked back down, but this is going to be an area that we want to keep an eye on, that 97, 343.07. And more than likely, what is going to happen here, because typically when you hit strong resistance areas like this, is you can anticipate a little bit of a retest, maybe some sideways movement, and then it will try to push back up. And that will give the moving averages some time to come lower and to catch up with the price. But then you can see if it gets above that 100, it then has room up to the 200 around 106. So those are the price areas that I'm watching, but it is at a pivotal spot. And really the big thing that tells me that there is some conviction behind this move is the volume. We could see that volume has picked up. That's the most volume that we've had on Bitcoin. You have to go back to, let's see. Wow, you'd have to go back quite a bit. You'd have to go back to May of last year, and we started really running after the April lows. So Bitcoin could start to push a little bit. So it's making a run. Let's see if it sticks. As of right now, it is, after faking everybody out there for quite some time. So let's see how much strength that has to the upside. Taking a look at the QQQ, same concept here that we're talking about on the SPX. We have higher lows that are in place, and right now we dipped below that 50-day simple moving average and below the 50-day EMA, and you could see that we do have a little bit of a lower wick there. So buyers did come in, and basically we're getting compression here. This is almost a triangle pattern. If I would just draw these lines here, so you can see the price action is converging to a point. And what that means is we're going to get a move to the upside or the downside. You can see that there is quite a bit of support here on the VRVP. You also have the 100. So even if it would come down, you think it would find some support here. But above these volume nodes, there really isn't much holding this one back. And really, big tech has been range bound for quite some time. It still has yet to fill this gap. Let me just get rid of these lines here. But this gap that was created back on November 3rd, it still has yet to fill that. It got close here on Tuesday, yesterday, but it hasn't done it yet. So we're keeping an eye on that to see if that can get closed at some point. If we come over here to the Dow Jones Industrial, the DIA, again, I like to follow these upper trend line resistance areas. And so this one has room to push up. And more than likely what will happen is when it does push, it's going to make a nice run. It's going to hit that price area, and that's where we'll see it get rejected, just like we saw here, 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 and here. So keeping an eye on that as well. And then IWM, our Russell 2000 small caps, is that a new all-time high today? Close. We got a new all-time high yesterday. And this is, outside of Bitcoin, this is one of the only green tickers out there today. So small caps are showing strength. We are close to being overbought. You've had several green days in a row here, or not in a row, but consistently. So what is that? 6, 7 out of 9, the past 9 days have been green. So we're seeing some money flow into small caps. And then if we just take a look at some of the other things that we look at for broader market sentiment, we could see that on the 10-year yield, we're really just range bound, just chopping sideways. The dollar, after this spike up from December 4th, we're just kind of moving sideways right there on the 50. And the head and shoulders pattern still is in play here. You're really just retesting this neckline. Let's see if it wants to roll over. And then the mighty VIX spiked above the 50 today because of the hotter PPI report, got rejected. We are coming back down, but it is up a bit. So we'll see if that wants to cool off a little bit. It's going to need to, if we're going to push into 7,000. Like I said, I think that we do that, but it is a little elevated at this point. And then taking a look at gold, gold was down a tiny little bit today, but this thing is just so strong. It just keeps making new all-time highs, and it doesn't look like it's going to end anytime soon. We finally did break above here on the RSI. We were in overbought territory, but you can see this thing could press up pretty significantly into being overbought before it wants to roll over. So money continues to flow into gold. If you guys have tickers that you want me to look at, go ahead and drop those in the chat. Otherwise, I'm going to look at a few here just to kind of give an overview. But let's do a rundown here of the Mag 9. Broadcom, for every time that it pushes up, it pushed into that 50 yesterday. It got rejected, and that's happened quite a few times. And really, there is a pretty strong support that is right around this 320, 322 area where it keeps finding bounces. And it definitely shows that there's interest there. But notice that we do have two gaps that need to be filled. We have one down here. This is an earnings gap from September where this thing popped higher. And we have this gap overhead, which is off of a gap down on earnings. And the question continues to be with Broadcom is, which one is going to fill first? Is it the gap below or is it the gap above? We don't know, but we definitely have some support that is built out there. And then we have Netflix, who will report next week. That's the 20th. That's on Tuesday. And this is an interesting spot for Netflix here. If we measure this out from its high down to a new recent low that it's made today, down $46, 34%. And this is ahead of earnings, and potentially this is getting set up for a push. And this does remind me, let's go back to 2000 and let's see here, right here. So this is 2023. You could see that Netflix made a huge push up into July, had this big drawdown, was below the 200, and then people were saying, "Oh, Netflix is done. It's a outdated business." And then what happened on earnings? It gapped up. So I'm not saying it's going to happen on Tuesday, but just keep an eye on Netflix. It is pretty beat up, and it does have a history of recovery. It's pretty beat down right now. We're hanging out down here, oversold, and so this one could be ready to get a push here on earnings. So just keep your eyes on Netflix as we head into next week. But really, big tech, we're seeing a rotation into small caps, into other things. But really, big tech across the board is getting beat up. Microsoft, after that double top, down below the 200 again. This is a pretty large bearish candle that we have here today. So this looks like it's going to continue lower. And again, they have earnings coming up as well on January 28th. All the Mag 9 are getting ready to report. So I think that's why you're seeing some risk come off of these tickers, and you're seeing money moving into other stocks. You're seeing that on Amazon too, which had this nice push up, got up to 249, but it's getting a little bit of a retest now. It's finding a little bit of support here on the 20. Let's see if it's going to get a bounce. And they're going to have earnings coming up. Right now, they are estimated for January 29th. But again, another of the big boys who are going to be reporting. And then you take a look at Apple. So Apple has this head and shoulders pattern here, right? Clear as day. And we could see that neckline was broken. It is clustering right around that 100 right now. You do have this gap to fill down here at 253.34. So let's see if buyers step in here and it wants to push up, or if it cuts right down through that gap. And again, Apple does have earnings coming up on the 29th. So there's just so many big earnings coming for mega cap tech here in the next few weeks. And then we look at Google. All that Google does, this is the all pro right now of the Mag 9, because it just continues to push up. It's in an up cycle now. And in the last few war rooms that I did, just drawing out how this is just stair stepping, push up, retest, push up, retest, push up, retest, push up. So the next thing that we're probably going to get here is a retest. And again, they are reporting earnings on February 4th. So again, I'm not chasing Google here. I feel like this move is extended, so I'll wait. And I'm just looking for other things that have more opportunity. And then you have Meta. It looked like it was going to get a run. You had this big crazy wick here on the 12th, rejected off the 100, and it has since come back down. And there was a little tiny gap here that got filled at 617.01. That was filled today. And they have earnings coming up right now, February 4th. That's what looks like the date, but we could be getting a double bottom pattern coming into play here, with a lower low and a higher low if this structure holds. And then let's see what happens on earnings. Meta has been beaten up pretty good since its last earnings report. Can it push higher? We can see here this big massive gap down on their report, and it could be set up for a move higher. They did gap up in August and made it its all-time high. So let's see if Meta wants to get back in the game here whenever they report earnings. And then you have Tesla that went on that wicked run. It almost got up to $500, $498.85, and then just dumped, found support off the 100, got a little bit of a relief bounce, but then rejected off that 20-day exponential moving average. Back down, sitting at the point of control. This one looks like it's going to come back down and test that 100 one more time, which if it does do that, you might be able to catch a nice little bounce on a day trade. But it looks like this one may want to roll over a little bit. And again, they are going to be reporting the 28th. So massive, massive earnings coming up here for all the big guys. And then the last one that we'll look at here, NVIDIA. So they're going to be reporting the latest of this group, not until February 25th. That's around the time that I could see the market heading into correction mode, but really just range bound sideways, not doing much since August. It did have this pop here in near the end of October, but it's really done a whole lot of nothing. And we could see here we have the point of control. We have this large volume node, but you could see that there is thin volume below down here to the 200. You could see what happened last time on earnings. It did gap up, but it gave back all of those gains, and that did spark a little bit of weakness in the market. So that's kind of an overview of what's happening today. Are there any tickers that you guys would like me to look at, or are you satisfied with what I covered for you today? All right, I'm giving that appropriate wait time for you guys to respond. I don't see anything coming in here. So I just want to thank you guys for joining me here today. And Rachel, I'm glad that you got something from the NVIDIA and the Tesla. You are welcome. But just want to remind everybody, we will be kicking off our year-long mentorship called The Blueprint next Tuesday. It's 45 sessions with me. It's live. It's weekly, where I'm teaching market concepts on how to use specific strategies related to day trading, swing trading, investing, options trading, and it's really all about execution. And so it's the learning component, but it's also application and talking through your trades, feedback. It's a live setting, so encouraging you guys to check that out. If you're interested, just comment on this video. I'll get back to you with more information. But with that said, that's going to do it for the Wednesday War Room. Looks like we are going to have a red day. The SPX down 65 points, Bitcoin down 1,800. But there are going to be some opportunities. So as always, best of luck out there in the markets. Thank you for joining me and for your support of the channel. And I will see you the next time that we have the Wednesday War Room. Take care, everybody, and I'll see you next time.